How's it going, everyone? My name is Mason Davis, and today I'm going to be talking to you about seller financing. So, what is seller financing? Seller financing is basically where the buyer, instead of going through the pre approval process and then going through a lender and the whole mortgage, they will just directly be making payments to the seller. Some of the benefits, at least for the buyer side of the seller finance, is most lenders have more strict requirements than just the common seller would have. So, as a buyer, if you're on the verge of being able to purchase a home, but then the lender still won't approve it, chances are the seller will allow it. Sellers can do a credit check, but it's usually not nearly as stringent as what a lender would require. It's a way faster close because you don't have to go through the entire approval process. And then you can kind of buy it as is. So even if you want to get like a fixer upper, for example, but then the lender's like, this isn't a good investment for us, but you know the potential of it. Seller financing is the way to go because then the seller can just sell it as is, and then you could do the repairs on your own time. Another benefit of seller financing that you don't want to forget is it's a little bit cheaper come closing because then you don't have to pay any of the mortgage fees or the appraisal costs. You could still get an appraisal, but that is kind of up to your own personal preference because the lenders usually require it, but you could do whatever you want. Some of the potential downsides to seller financing are a higher interest rate. I personally don't feel like that one's that big of a deal though, because you will be getting equity in your home and the appreciation of the home. And I feel like that would counteract not being able to buy the home through a mortgage. And then there is a balloon payment typically, usually 5 to 10 years. It's usually just what the seller and the buyer's terms are. But at the balloon payment time, the seller will just expect the full remaining balance of it. But usually what happens is the buyers will then just refinance it through a lender, and then they'll pay the seller off entirely and then just continue the payments through the lender then. And then that's really beneficial for people that at the time were on the verge of getting approved, but then just barely weren't able to. And then now they're way more comfortable. The total loan that they would get through the lender would be significantly lower because, I mean, you've already made 5-10 years of payments off. The appreciation of the home, the equity in the home. So it's a lot safer of an investment, at least from the lender's perspective. And then the due on sale clause, I don't know why I said due so weird. The due on sale clause usually only kicks in when the seller that is doing the seller financing didn't own the home in full and they were still making payments on it through a lender. Because usually some lenders will allow seller financing, but most do not. You just have to make sure that the seller owns it in full, and then if not, the lender that the seller is using is okay with it. Because what could happen is as soon as the sale transfers, the lender could demand their remaining balance, and that could throw the whole thing for the loop. So you just got to make sure knowledge is power. At the end of the day, seller financing is really beneficial for buyers. We didn't really see a lot of seller financing in 2020 and 2021. That was a totally crazy time, but now it's becoming more prevalent and it's a really good option for buyers that either have a lot of cash but don't really have a good credit score to qualify, or vice versa, where people are really good at making their payments and being consistent, but they don't have the down payment required to get qualified. It's also really beneficial for people that want to start making some money through real estate and getting fixer-uppers or rental properties, but I mean, that can cost a lot of upfront money. And so it's really just up to what the buyer's goals are. But as an option, it's a really viable option.